Hey, my name's James Nicholson and welcome to this week's Mortgage Roundup. There is so much improvement this week on mortgage rates. It's really positive to see. You see, in August, well, we're still in August, but at the beginning of August, we finally got the Bank of England dropped the base rate. And there's talk now that the Fed are going to drop in September. Potentially, the Bank of England will drop again. Inflation, it did go up slightly in the July figures, but the Bank of England has come out this week and said that they don't see inflation rising as much as they were expecting at the end of this year. So what that means is that banks are getting a little bit more positive on the outlook and the expectation that the base rate will drop over the next few months and 6 months out as well. And so they're getting more competitive. But not only that, what's also happening is the market has slowed down. So transaction volume is lower at the moment. And that's good for people like us because the banks are fighting to get our business. So what you're going to see in today's videos is some quite significant drops with rates. You're also going to see some people that have dropped their fees significantly as well, which is also very good. And we're going to cover a range of different mortgages. So before we jump into this, if you haven't done it already, do subscribe to the channel over there and hit that bell notification. By the time you see this, I'm pretty confident that we'll be at 28,000 subscribers. So let's get to 29 and 30,000 subscribers as quickly as you can. And while you're here, smash like, tickle like, do something to that like button down there. That really helps with the YouTube algorithm and then gets more views on the channel. And that's what we want to do collectively. So I appreciate everyone that does that. So let's start here with HMO mortgages. So if you're new, you might not know what is an HMO. So an HMO is a house of multiple occupancy, like student accommodation, that sort of thing. And so these mortgages are generally through a limited company. They would be now. And they're a little bit more expensive because the bank knows that you're going to make more money. There's less lenders that do this type of mortgage. And so it is a bit more expensive. But it's fine because you should be making more money. So Mortgage Works is still the best deal out there, but they've dropped some rates here. So 5-year deal first. The deal now is 5.49% with a 3% fee, and they will lend you up to 75% of the value of the property, which is good. Their 2-year deal has dropped. It's down to 4.94% now, which is definitely an improvement. It's a 3% fee, 75% loan to value. So that's pretty good. That's a decent lender. They're part of Nationwide, so go and check out them if you are looking or you have an HMO already. Now, limited company buy-to-let mortgages. Now, what I want to say here is if you're buying a new property, so let's just say you're starting and you want to get in buy-to-let going forward, you should now really buy it in a limited company. I've done videos on this channel that talk about the pros and the cons of buying in a limited company or your personal name. You're welcome to go and check those out and see how that works. But there are really a lot of pros in having it in a limited company. But rates are slightly higher on limited companies, but it's way more tax efficient, so it does work out better. There's not so many lenders that will lend to limited companies as well, but Mortgage Works is, again, the best deal here. They've got a 5-year deal at 4.99%, which is down. 3% fees, they've kept those at that pretty much on most of their products. And there's 75% loan to value. They have a 2-year deal, which is 4.79%, which is down. Fees on that are 3%. Now, I just want to say something here on this one. If you have a more expensive property, they do have other rates that are slightly more for the rate, so 5.12 or something like that. But the fee is fixed at 3,995, so $4,000 fixed. Now, if you were if let's say the property was worth 300 grand, 400 grand, or up, it probably would be better to look at that because the fee is just going to be a flat fee rather than the percentage. So if you've got a more expensive property or something down south, maybe look at their higher rates. I would say that's a good option for you. Now, most people that have buy-to-lets have been around for decades now. Most people for decades have put them in their personal name. So let's just say you've done that and you want to remortgage, or maybe you don't want to go with a limited company. Mortgage Works have got some of their best rates on personal name. They've got a 5-year deal at 3.79%. That's down, which is good. The fees on that are 3% as they were on all the others. 75% loan to value. If you want to borrow more, they also have an 80% loan to value. So that means you only need a 20% deposit. So that's another option with the Mortgage Works. They've got a 2-year deal. This is one we've talked about quite a few times on this channel over the last few weeks. This is down to 3.49%, and the fees have dropped 1% on this one. And that makes a big difference, 1%. So it's down to 2% now. 3% down to 2%. That's great that they've started dropping fees. Let's hope that they get back to the days where it was £1,000 or 500 quid. Or some of you are getting deals at the moment where you actually get paid 500 quid to take the deal on. Those sorts of things are out there. So, but they do have a higher interest rate. So this is a decent, or it's the best rate, in my opinion, for a buy-to-let in your personal name. Next, residential mortgages. So this covers most people who watch the channel. And so this is for people that have got 25% equity or more, or a 25% deposit if you're buying somewhere. And so Nationwide, who is Mortgage Works as well, they are the best deal at 5 years. They're really going for it, Nationwide, which is interesting. 5-year deal is 3.99%. That is a decrease. It's the cheapest rate on the market for 5 years at the moment for 75% loan to value. You might have heard headlines where you talk about rates that are close to 3.5%, but they need a 40% deposit. So this is 25% deposit or 25% equity. Fees are $9.99 on this one. So it's interesting. On their residential, the fees are £1,000. On their buy-to-let, they're 3%. It's a big difference. So hopefully the Mortgage Works might start copying Nationwide fees soon. So 5-year deal is pretty good. 2-year deal is with Leeds Building Society. They've been more competitive in recent weeks as well. They've shown up last time we did this as well. 4.35%, which is the cheapest rate on a 2-year deal. £1,499 in fees, and this is on 75% loan to value. So that's another great option, the Nationwide and the Leeds Building Society. Speak to your broker about these deals rather than just trying to go direct. You can often get a better deal with your broker. Next is Nationwide have decided pretty much they want all the best deals in the market because if you've got a 10% deposit you want to buy somewhere or 10% equity, they are really the only option here. So it's very interesting. Nationwide is making a massive play to really, really dominate the mortgage market. So they've got a 5-year deal that's cheaper than last week's one. It's 4.59% for 5 years with $9.99 fees. That's a good deal when you consider you've only got 10% deposit in there. So, or 10% equity. That's a pretty solid deal for a lot of people. The 2-year deal is 5.14%, which is down as well. The fees are $9.99. The loan to value is 90% as well. So, look, rates have been moving in the right direction. It's really, really, really better, way better than it was a year ago. We were seeing 6%, 7% fees, rates even with big fees on top of that. The market is improving. I do think that as time goes on, if the market doesn't get much busier, you will start to see some better rates out there as well. And if you've got some rates that you've seen, lenders that you know that we should be looking at, do comment below. I'll always take a look at them and check them out and evaluate if I feel it's a good deal for these options as well. Do smash the like button, guys. I want more people to see this video. Share it. Look, it'll take you 2 seconds. If you press that share button, I'm sure you know somebody that needs to remortgage at the moment. Just WhatsApp it to them, Facebook message it to them, email it to them, and get them to watch the channel. And if you didn't earlier, subscribe, hit the bell, check out all the other content on my channel, including this video right here.